Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 27th of June. All right, now as we enter the Asian session, you'll notice the major pairs, the key sort of market conditions at the moment. Well, we've got normal liquidity. Okay, there's no major events, but we have got momentum fading from, the whole build-up from the Fed last week, and also the Iran US conflict sort of building. That sort of seems to be fading. As we move towards that G20 meeting as well, which will start tomorrow and go through on the weekend. This is one of the major reasons why you wouldn't have open positions over the weekend. We could get some weird stuff out of the G20. Trump is already coming out and sort of spraying around a bit of the love, which is, this is his usual method. Coming in and sort of basically saying, yeah, we can do a deal with China. It's lower tariffs, all this sort of stuff. Basically, but expect that to turn around any sort of second. And the general feeling across the financial market news services hold steady on reduced bets on steep US rate cut. Okay, so basically the Fed Powell has come out yesterday and sort of basically said, chance of a 50 basis point cut is like ludicrous. So they're unwinding that, and what we're seeing in the currencies is that expectation roll back. And what that does is, especially when there's no follow through on the fundamental data, no big US numbers coming up, what you end up doing is on the hourly charts in particular, you start to see a bit of sideways trading. And we're seeing that on the dollar index, dollar yen as well, which has slowly had a little bit of a climb. Dollar Swiss has stalled as well, as has euro and sterling. But funnily enough, the two battlers down the bottom here, the Aussie and Kiwi, those two pairs have just slowly creeping higher. And I think that's because of that geopolitical news that Trump is coming out saying we can do a deal with China, right? If there's lower tariffs on China, that's very good for the Aussie and Kiwi economies. And that's probably why they're just trickling higher. They're not really moving aggressively, obviously, because everyone's used to what Trump is doing and how he backflips. But that's exactly where we are at the moment. So overall sentiment, central bank sentiment, or the overall feel for the euro, sterling and Aussie, pretty neutral, because we've got sort of bearish Fed and we've got bearish central banks associated with those. So you know what, they've got room to just drift sideways until we get some sort of work out what's going on here with the overall dollar index. As I said, that may come from the G20. Now, Thursday's trading, whilst I'm on this page, let me just give you a bit of a look here. There's a fair bit to play for today. Now, I know there's no major, extremely high-impacting data releases that you have to be flat for, but just keep an eye on this one in particular. I mean, I'll go through a couple. The NBNZ Business Outlook numbers. Now, this is rated as like one tier, okay, like, low impacting. This has the potential to be huge. When the Kiwi economy turned, it went from like -3 or -5 to -50, which means basically everyone expected terrible times. So this NBNZ Business Outlook number, which is due out in just over an hour and a half, that is a pretty high impacting release, something you may want to watch Kiwi for, right? Slowly momentum at the moment is going up. So this number comes in better. We may see a move to the top side in the Kiwi, a bit more of a sustainable move than what we're currently seeing. All right, now, if I just scroll down here and you come through, you can see there's a fair bit of Eurozone and German data coming out. So the euro is going to definitely be in the spotlight. Okay, we've got the prelim CPI numbers out of Germany, and also the sentiment numbers out of the Eurozone there as well. This is going to potentially spark some interest in the euro. So the European session, or the start of it, is going to be something well worth looking at, especially with euro and the euro crosses. All right. Now, in that North American session, there are some decent numbers coming out. We've got the final GDP numbers. Now, the final numbers, they're usually pretty much on the mark. But you know what? This with the market starved of oxygen, and what I mean by that is starved of US data, the GDP numbers could really come into play. It's a tall order to say the initial jobless claims will. This should be like a one tier. It's not massive, this number. Non-farm payrolls, which is next Friday, that's the big number there as well. And also keep an eye on the core PCE, the final prices there as well. That could really come into play. And if I just scroll down a touch further, I think that pretty much does us. does it? Well, you get the average weekly earnings there out of Canada. That could definitely be something there. You get the pending home sales. So there's a few things here coming up. Well, there's plenty of peripheral data, is what I'm trying to say, coming out today, starting with those NBNZ business outlook numbers. So you want to probably have a close look at those before you start spraying your cash around the market. Now, just to give you a bit of a look, I mean, to match up what I was saying there with the momentum fading on the hourlies, you can see it very clearly. Sterling and euro just trading straight through that sort of resistance line. This means it's not really going anywhere. Sideways trading means it could go up or down. There's no clear momentum. And as you can see here, the Aussie and Kiwi, not exactly setting the house on fire, but slowly moving to the top side. You can start to see how the market is starting to feel a little bit more comfortable with the US-Iran situation, with dollar yen slowly rallying. And I drew these trend lines yesterday. No surprise, it sort of stopped right on the trend lines. There's a couple of more above that too, so it may be tough work for dollar yen to go any higher. I think we might start to see it trade sideways. And funnily enough, I mean, oil's at 58.90. Dollar CAD is trending quite well on the short-term perspective, okay? It's one pair, and if oil keeps rallying, well, then I expect dollar CAD to continue to the downside. And that's going to work in quite nicely if you're patient enough with the potential opportunities come tomorrow, come Friday's trading. We've got obviously the CPI flash estimates on Friday, as well as the CAD GDP. Now, it's a bit of a shame that isn't coming out pretty soon, because I like the setup here on dollar CAD. Strong GDP, dollar CAD keeps going lower, or really, really weak GDP, we could see a nice break to the top side. So anyway, GDP, we have to wait for that and see how it plays out. The pair to be focusing on for me is dollar CAD. It has got the best overall sentiment at the moment and is the best trending pair. So look at your CAD and CAD crosses, I would suspect today the best opportunities. And outside of that, just follow the data. As I said, we've got the Kiwi business outlook numbers, very important for Kiwi. It's currently going up, so strong numbers are better. If the numbers come out weak, it's fighting this overall trend, and that's going to be pretty tricky. All right, so just be aware of that. And then obviously the euro coming into the European session with the all those sentiment numbers and German CPI. North American session, you got the GDP numbers. All right, guys, overall, it's a pretty solid day where we've got things that can impact. And that's what we're looking for as traders, is looking for that overall direction to give us the overall trading opportunity. So make sure you tune into that. All right, guys, have a good trade day. We've got some great updates coming up, so stay tuned for those over the coming week. All right, guys, cheerio.